thanks for those details. Now, HUL came out with its third quarter numbers just a while ago, and the management is addressing the media, so let's cut across.
Media approach, we launched Lakme's Rouge Bloom range and Treseme's Silk Press range, expanding our masstige offerings. Nor joined forces with Squid Game 2 for a one-of-a-kind, digitally interactive campaign to promote its Korean ramen range. We have continued to drive sharper portfolio choices during the quarter, including divestment of water business, decision to demerge ice cream business, and our recent acquisition of Actives-led premium beauty brand Minimalist. Let me take a moment to give you an update on all these transactions. We have completed the sale of our water business on 1st of November, received consideration and recognized profit for the same this quarter. Coming to ice cream, we previously spoke to you about our intent to separate the business. The board of directors has approved a scheme of arrangement for demerger of the
So HUL, they're meeting expectations in the third quarter, but staying with earnings, HDFC Bank's third quarter numbers have come in line with street expectations, while asset quality was slightly deteriorated on a sequential basis. Net profit jumped 8% to over 30,000 crore rupees, while net interest income rose 2% on an annual basis. Abhishek Kothari joins us now with the details. Abhishek, take us through the numbers.
To begin with, it was a mixed set of numbers that has come in from HDFC Bank, almost in line performance with respect to PNL. The agri portfolio has impacted the asset quality this time around. So take a look at the net interest margin. Due to decline in CASA, the net interest margin has got impacted. On total assets, it's at 3.43% versus 3.46% in the previous quarter, a 4-quarter low. Now, other income this time was soft. That is in line with the loan growth that was again on the softer side. The operating efficiency has remained stable, so cost to income ratio has remained largely flat at 40.6% when compared to 40.6% in the previous quarter. Now, ex of treasury, operating profits are up 12.5% YOY and about 2.1% sequentially. This is better than the loan growth that they have seen. The return on asset has come in at 1.9% versus 1.96% in the previous quarter. Now, there were slippages of 8,800 crore when compared to 7,800 crore. If you take out the agri portfolio from these slippages were stable on a sequential basis. Annualized slippage ratio is at 1.4% versus 1.25% in the previous quarter. Along with agri, the gross NPA ratio has come in at 14-quarter high, net NPA ratio at 14-quarter high. Ex of agri, gross NPA ratio has remained stable. The PCR has declined, which is a key negative to note, at 67.8% versus 70% sequentially. The gross NPA ratio, as I mentioned, ex of agri, has largely remained stable. Their PNL is better than our poll, both on NII and PAT. Back to you.
Right, Abhishek, many thanks for those details, but let's go back across to the HUL management, which is addressing the media on their third quarter numbers.
Remains on driving competitive volume-led growth across our portfolio, prioritizing investment across core, future core, and market makers portfolio. If commodity prices remain where they are, we expect a low single-digit price growth in the near term. Amidst inflationary market prices of materials, we expect to maintain EBITDA at lower end of our range of 23 to 24%. We will continue to manage our business dynamically, driving savings through our net productivity program and provide the right price-value equation to our consumers. We remain focused on our job of transforming the portfolio. The mid to long-term opportunities in the FMCG industry is immense. With strategic clarity and operational excellence as our foundation, we are well positioned to leverage this opportunity and grow competitively. With this, I complete my prepared remarks and we can now take questions.
Thank you, Ritesh. Shilpa, would you like to ask the first question? We'll come to you, Sesa.
Yami?
Shilpa. Okay, Sesa, you can ask the first question. Please.
Right. So thank you for the opportunity. So, firstly, I would like to know how is the current demand scenario looking like? As we speak, are you seeing any signs of improvement in urban demand? And also, are there any near-term triggers that you think would aid demand going forward? That is one. And second, on the minimalist deal, if you could give some more insights into, how this fits into HUL's overall strategy, as we know that the company is focusing on, sharpening its BPC focus. So on those lines, if you can just share some insights.
Maybe I can speak to the market trends and then request Ritesh to give you some understanding in detail on the minimalist joining our family. On the market, we clearly see rural gradually improving consistently over the last few quarters, and that's good news. Urban, on the other hand, continues to moderate in terms of growth, and at this point, we see that trend continue in the near term. As a result of which, the overall market is muted because it's a combination of these two sectors. We expect going forward, given the good signals from both the Kharif and the Rabi crops, that the rural markets will improve. And on urban, it really depends on the macro factors. But as far as we are concerned, as I have been saying in the past such calls as well, that our job is to do what we can control, which is to go where the growth is, invest behind our operational efficiencies, grow competitively, which we are indeed. We're growing competitively across our business by way of volume. And importantly, we will at the same time keep doing what we need to do to be future fit, which is basically as our strategy, which we shared in our capital markets recently, contemporize our core, premiumize our future core, and lead market making. So we're very focused on doing both the operational excellence, competitive growth in the near term, and our strategic investment in the long term. And Minimalist is a great example of how we are investing behind building a portfolio, especially in B&W, that's absolutely fit for the future, and probably a great segue to hand over to Ritesh to speak about the Minimalist brand and why we're so excited about them joining our family.
Yeah, we had mentioned about our own strategy of beauty and well-being, where one of the key imperative for us is to improve and increase our share of the premium portfolio. Minimalist as a brand is deeply rooted in product efficacy and consumer love. The brand operates at masstige price segment within skincare and hair care, and which is why it is a fabulous fit to the portfolio of Hindustan Unilever. It has a very good presence online and hence strengthens our position on e-commerce as well. We have acquired the business at an enterprise value of 2,955 crores. The brand today has basically in the last 4 years' time grown to become a 500 crore business and also profitable. We acquired the business at 5.9 multiple, and we believe that once we unlock synergies of Hindustan Unilever and bring that, so the team Minimalist and team Hindustan Unilever put together can come and create a bigger version of Minimalist, and the synergies that will unlock will also be able to invest more behind the business and realize the potential that the brand has.
Right. And if I can just squeeze one more in, with the rise of quick commerce, as a preferred channel, what is the percentage of your sales coming from e-commerce, and also how much of that is contributed, from quick commerce?
As I mentioned before, e-commerce obviously continues to grow faster than the rest of our business. Still, it's below double-digit contribution at the moment to our business. Within that, quick commerce is indeed growing faster. And I will not be able to share with you the exact share of that, but it is clearly increasing its contribution to the total e-commerce business in our case. We are very mindful of our models where we have a very clear intentional strategy of differentiated assortment by channel. We serve an omni-channel consumer who's shopping for different shopping missions. The quick commerce consumer and the shopper is increasing in their shopping missions. So clearly all the platforms are now, so we have the convenience mission. We also have, the indulgence mission. So therefore including, we are increasing our assortment in quick commerce, and we are also therefore clearly growing quite high in that channel. And we intend to make sure that we are competitive in that channel and make sure that the assortment is clearly differentiated so that we serve the shopping missions that the Kirana stores are there for, and we also make sure that there's little overlap between the two channels.
All right. Thank you so much. I'll come back in the queue.
Thank you, Sesaj. Shilpa, would you like to ask the next question?
Hi, gentlemen, can you hear me?
Yes.
Hi, good evening. Congratulations on the acquisition also of Minimalist. Just at the risk of a little bit of repetition, I just want to come back to talk about what are we looking at going ahead in terms of urban demand? The numbers suggest that the situation has not really improved a lot. How are we supposed to now look at the entire demand scenario going forward? And a little bit, if you could touch upon rural as well, and also in terms of inflation, I believe some price hikes were taken in soaps and the tea portfolio. How much more of price hikes can we expect going forward? And also, if you could, give us a little more lowdown on how on the ice cream business separation, and also any timeline, if you could share with us on the listing and all of that.
So I'll speak to the market, and Ritesh will take the questions on pricing, inflation, and ice cream. On the market, first of all, I know we are reacting to a quarterly trend, even an in-year trend, but let's not first of all forget that we are in a very exciting consumer market of the decade. The per capita consumption across all our categories are extremely low. When you look back from a more of a wider lens, we can clearly see all categories that we compete in and build are going to grow exponentially 3 to 4 times. Take any market which is in our neighborhood, we're going to see growth there. Now, in the near term, there'll always be fluctuations, and no line of growth is stable or clearly predictable. At this point, I mean, a year or two back, we were talking about how rural was compressed, but now we see rural coming back. It's consistent, it's gradual, but it's consistent growth. We expect also that the future signals in terms of the monsoon and all other signals we pick up from the rural are good. But at the same time, urban, that was carrying the was doing the heavy lifting of growth for the last few quarters, is compressed and is muted. But we should not, try and extend this beyond what we can see in the near term, which is maybe a quarter or two. But I think we, as a leading company in serving our consumers, our job is to invest for the future, do what's right for our consumers, and importantly, in the near term, the best we can do is what we can control, which is, are we executing well? Are we innovating extensively? Are we serving our consumers in a superior way across all our 6 Ps of our brands? And we are exactly focused on that. And that's the reason why our near-term metric is competitive volume growth that is profitable, and we are delivering that. At the same time, we are investing for the future, and Minimalist is an example of that intention. But I'll now request Ritesh to take the other points that you had asked.
Ice cream, Shilpa, it'll take little about a year from today for us to finish. So we expect in March quarter 26 to finish the whole process of getting all approvals and getting the company listed. That's our current timelines. Of course, this is subject to appropriate approvals along the way that we'll end up taking. Coming to your question on pricing, and from a commodity perspective, today crude oil, which impacts, let me say, home care and many other parts of the business, that's benign. We have seen inflation in crude palm oil and in tea. And hence, both in soaps and tea, we have taken price increases about 4 to 5% in the current quarter of December, as we reported results. And this is always a policy that when we see price increase of commodities, we take price increase in small chunks. Once we have a more deterministic signal of total quantum of inflation, then we do the balanced job of taking either further price increase, but more importantly, keep driving savings across all the lines of the P&L. So only the net cost is what we want to end up taking price increases. Now, crude palm oil increased very sharply by 40% in December quarter. But since then, as we speak in January, we have seen it has come off by almost $100. So we will factor that into consideration along with what's happening with Indian rupee volatility, and then decide our pricing actions for March quarter. So that's on pricing for both soap and tea.
Just trying to get a sense, like last quarter, I think 2 to 3%, correct me if I'm wrong, was the quantum of the price hikes. Can we expect the same kind of quantum? And also, Videsh, we've been talking about, how last couple of quarters when there was a slightly deflationary scenario, we spoke about, maybe price-led growth is over, volumes will start coming back, but then that situation seems to have reversed now. So in terms of whether it's, low single-digit price-led growth that you're talking about could go on for how many quarters? When do you think, I know it is a bit of a crystal ball gazing, but when do you think volume-led growth could come back?
Yeah. So let me first talk about pricing, Shilpa. So, of course, there are 3 big commodities which impacts the portfolio: crude palm oil, tea, and crude oil. If at all we do see, and along with that, very important, the way currency pans out, Indian rupee vis-a-vis, let me say, dollar. These four elements determine the total amount of quantum of inflation. Today, we are seeing increase, as I saw and I spoke about, increase in crude palm oil and tea. Both of them have come off in last few weeks compared to the peak inflation that we saw in December quarter. So as I look at crude, and then when I look at impact of crude oil, which at circa $80 is pretty benign. So all put together, our view is that as we see commodities today, we expect a low single-digit price growth go forward. I don't expect a material change to that in near term. Now, when it comes to the mix of volume and value, and hence linked to growth, Shilpa, to your point, this quarter as well, we have grown our tonnage volume ahead of the market, and we have gained volume market share. We also have grown competitively overall, and our turnover-weighted market share is positive. Now, what has happened in the quarter, the tonnage growth that we have, and remember, our UVG matrix that we publish is a combination of volume and mix. So while volume has been positive, even in this quarter, the mix has been negative, which is what has negated the impact of positive volume growth. And on a net basis, we have reported a flat UVG. Now, why has mix become negative? Number one, our home care business has grown ahead of the rest of the business. It's a very strong business, complete portfolio, and has driven extremely well good growth. Home care also operates in essential category where it is very resilient to inflation and deflation. Even in high inflation period, you had seen we had driven positive volume growth in home care business. But when it comes to price elastic skin cleansing and tea, these are always, they get impacted. As you take price increases, volumes do get impacted. So that's, which is why overall at a category mix, we have seen mix getting impacted because of this dynamics. Second, we also have seen small price growth ahead of large price growth as urban growths have basically moderated. So that's a impact, second impact that we have seen. These two impacts put together have netted off to some extent because premium overall as a portfolio continues to grow well. But on a net basis, the mix has been negative. Now, we do believe that the dynamics of small pack growing ahead of large pack, given what's happened in urban market, this is transitory in nature. But as far as we are concerned, the job is very clear for us, which is to keep driving growth in the premium part of the portfolio. You heard from us earlier as well that our intention over the next few years is to drive 900 BPS improvement of premium portfolio within beauty and well-being. Today, the acquisition of Minimalist that we have announced is in a direction exactly to deliver that. Launch that we did of Simple Love Beauty Planet, the recent launch that we did of Novology, or for that matter, portfolio expansion that we did of Pond's and Lakme, all these put together will keep driving premium portfolio for us. And this is exactly how we want to also keep improving overall mix of the portfolio.
Right, thank you. That was HUL's management on their third quarter numbers. But on that note, it is time for us to head into a short break. More news and updates coming up on the other side. Stay tuned.